Hey, welcome back to The Dive. Today on the show, we have Rick Rule from Rule Investment Media joining us. We're going to ask his thoughts on where the media is heading, what's happening with BRICS, how the sentiment towards nuclear energy is shifting, inflation, what asset classes he likes right now, his thoughts on junior miners, and be sure to stick around to the end to hear the special offer that Rick has for you that you can take advantage of from the comfort of your own home. Hey, Rick, welcome back to The Dive. Thank you so much for joining us today.
Cassandra, always a pleasure to be with you. Thank you for having me back.
Okay, so Rick, let's start off with one of the big headlines this week. Penn Gaming has handed back Barstool Sports to Dave Portnoy for effectively free, with a couple of covenants. Now, Barstool was essentially 200 million social media followers and was originally purchased for over $500 million just a couple of years ago. Now, the media is changing fast around us, and we've seen a number of bankruptcies filed this year, along with huge layoffs. How do you think 5% interest rates impact the media landscape? And where do you think the media is heading? Do you think it will be more fragmented, or will we see larger players dominate the space?
Let me start by saying that I'm maybe the most unconnected person on the universe. I don't know how to turn my television set on, and I need my wife's assistance in dressing myself. So in terms of me answering popular culture questions, of which this is part, I'm singularly unqualified. My own social media business has never relied on debt, so it's always relied on retained earnings. So I would suggest that for many practitioners, the interest rates don't matter. I will say that the proliferation of many unprofitable businesses over the last 15 years, businesses that were valued on users rather than free cash flow, were probably businesses that were developed as a consequence of very cheap capital of all sorts, cheap equity, cheap debt, and the expectation of some magic around technology or around marketing. And that magic has been very difficult to generate free cash flow from. My suspicion, not knowing anything about this transaction at all, is that if somebody was able to buy some remnant of that many users and develop a reasonable and rational scheme of marketing to them for some form of royalty, that they ought to be able to make money on that many users. I know I couldn't, because I would require users that were interested in oil and gas and mining. I suspect the useful universe of that user base to most focused hosts would be very low. But I suspect that there are people out there, perhaps the founder, who can make a go of it.
Okay, now changing gears here. What is your take on everything that's happening with the BRICS countries? Do you think that they can establish enough of a trust level to work with each other on a monetary standard?
Answering the question from last to first, no, I don't ultimately believe that they trust each other enough. And I think that what they're proposing now would be best described as a settlement scheme rather than a currency. A currency suggests, particularly a gold-backed currency suggests, that those nations would all subsume their national currencies and hence their national fiscal policy to a common policy. They don't have enough gold collectively to secure a currency that would be large enough to handle all of the currency needs of their citizens. If they are proposing, rather, a gold-backed settlement system, so that at the end of the quarter, if, as an example, the Russians had sold the Chinese $10 billion worth of doodahs, and the Chinese had sold the Russians $12 billion worth of doodahs, and there was a settlement balance of $2 billion in China's favor, that they would settle it with this BRICS currency, which would ultimately be convertible into gold. The problem with that, Cassandra, as I see it, is that in order for them to trust each other, all of them would have to contribute their gold into the settlement bank so that the person receiving the settlement could be sure to get settlement. I can imagine the Russians, as an example, having a trade deficit with the Chinese, and the Chinese saying, "We'd like our gold, please." And the Russians would say, well, here's some bricks, not gold bricks, but bricks. So no, I don't see that happening. I do see the eventual development of bilateral and multilateral settlement mechanisms outside the US dollar. I see that simply because the US government has been so odious in terms of applying extraterritoriality, American aspirations, goals, whims, uh, through the SWIFT settlement system, and then later by, in effect, canceling Russia's claims to their U.S. treasuries. The United States has made it both unpleasant and dangerous for many countries, pardon me, to store their foreign reserves in U.S. treasuries because of the U.S. predilection for stealing them. And then, of course, weaponizing the SWIFT banking system, which isn't the property of the U.S. One of the things I like to say when asked questions like this is that the enemy of the U.S. dollar are not in Beijing or Moscow or Tehran. The enemy of the U.S. dollar is in Washington.
Okay, so let's move on and talk about uranium. How important is Niger to the uranium market?
Niger, as I understand it, provides about 4% of the world's supply currently. It's important to the French, but I suspect that the French, if need be, could obtain uranium sources in the current market from elsewhere. Remember that uranium is fungible. If, as an example, the production in Niger somehow found its way to China, it would displace uranium currently imported into Niger from places like Kazakhstan, and the Kazakhs would ship it to the French. So what's going to happen what may happen is that uranium will be rerouted. It won't go to uranium heaven. It will go rather than from places who Niger believes are hostile to it to places who Niger believes are friendly to it. Having arrived there, it will displace other uranium, and the uranium will go to the source that was deprived, I guess, of uranium from Niger. It's important to note that while Niger only supplies about 4% of the world's supply of uranium, their market share in terms of undeveloped and undiscovered reserves is probably much higher.
How much do you feel the sentiment towards nuclear power has shifted over the last couple of years?
Cassandra, I find myself in the odd position, maybe for the first time in my life, of being sort of politically correct. I see my advocacy of nuclear energy shared by people like Bill Gates, even my own president, now, rather than vilifying uranium, is seeking to buy votes by subsidizing small modular reactors. The co-founder of Greenpeace is in favor of uranium. Now, some of that is similar to the first question you asked me, the social media question. I'm not a real purveyor of fashion trends, but I can tell you this of very important and very immediate import. The Japanese public, post Fukushima, have gone from being almost 75% opposed to nuclear power to 62% in favor of nuclear power, which is allowing the current Japanese government to increase the pace of Japanese restarts, which in itself is a very, very, very important part of increasing near-term demand for uranium.
In light of the recent drop from 9% to 3% in US inflation, where do you think inflation is heading? What categories should we be watching over the coming months?
I would dispute the 9% to 3% report. That measure of inflation, which is the consumer price index, is a manufactured index. I think, in fact, inflation levels have headed down because, in particular, natural gas prices and until very recently, oil prices have headed lower. I think that itself is transitory. But I want to get back to the inflation measure. The consumer price index is a manufactured metric. First of all, it's, quote, hedonistic. If the makers of the index decide that the quality of appliances is higher, they adjust the price for the fact that the quality is higher. Similarly, if they think that the standards and apartments that people live on now are better than they used to be, they adjust on a hedonistic basis the utility earned by consumers without real impact on the economy. More importantly, when they report core inflation, and they do that only when it's convenient, they don't include food or fuel. As you can tell by looking, Cassandra, I kind of like to eat, and a consumer price index, which doesn't include food, is of very little use to me. But the most important criticism I have of the index as a cost of living index, which is what matters to you and I, is the fact that it doesn't include the cost of government or tax. Now, for most households in most parts of the world, at least households that are solvent enough to listen to your show and care about finances, tax is a more important component of the cost of living than shelter, food, energy, and transportation combined. The idea that the official measure of inflation doesn't include the cost of government is silly. Now, Cassandra, I guess if I didn't have to pay the tax, I wouldn't bitch so much about the index, but I don't really believe that's on offer. I've tried in a very rough form to calculate my own cost of living index, understanding that I'm sort of old and fat and I don't have to buy much anymore. I'm not really a consumer. As you can tell, I dress poorly. I drive old cars. There's just not much I want. But anyway, I believe that the deterioration of my US dollar purchasing power is about 7% compounded. And about half that increase on an annual basis is increase in direct and indirect taxes. So when people tell me that core inflation in the United States is 2.8%, what I try to tell them is by the metric proposed by the Congressional Budget Office, that's true. But that metric is irrelevant to their own standard of living or the purchasing power of their savings over the rest of their lives.
Okay, so given the current environment, what asset classes do you like right now?
Well, perversely, and it'll take me a while to explain this, I like cash. I understand that the purchasing power of my cash means I'm actually losing money holding cash. But I believe in the current circumstance that we have, that there's a real risk of some type of black swan liquidity event. And I've learned in prior black swan liquidity events that having the cash gave me the tools and also the courage to take advantage of the circumstance rather than being taken advantage of the circumstance. Many of your listeners may be too young to remember 2008, but 2008 was a market where most markets, equity markets, debt markets, real estate markets, fell by 50%, and they fell by 50% in 6 weeks. Those people who had the cash and had the courage had a truly spectacular 2009. I happen to be one of them. And so I advocate cash. I also advocate gold and silver, and I'm delighted by the fact I'm making systematic purchases myself of gold and silver. I'm delighted to see the price gains moderated so that I can buy more cheaply. A lot of people, I guess, buy gold for greed reasons. They read stories about the decade of the 1970s when the gold price went from $35 to $800, $850. I buy it for very different reasons. I buy it for fear reasons. For me, gold is insurance. Gold is insurance against both inflation or the depreciation of the purchasing power of the U.S. dollar, but it's also insurance against declining faith in institutions and trade. The U.S. dollar is a promise to pay. It's a receipt. Gold isn't a promise to pay. It's payment. You don't have to trust the counterparty because you have been paid. You have the asset. I am particularly invested in a practical sense in the oil and gas industry. I don't understand investors who don't own oil and gas. The industry is deeply out of favor. The governments are telling the oil industry they're going to put them out of business in 2032, but that's not going to happen. A few substantiations of that. People say, "What about alternative energies, Rick? You're missing this whole green revolution." Well, we've now invested almost $5 trillion over 40 years in alternative energies. I'm glad your eyes widened. Mine did too. And we've reduced the market share of fossil fuels, Cassandra, from a high of 82% all the way down to 81%. So a $5 trillion investment has reduced the market share of fossil fuels by 1%. over 40 years. Peak oil demand, from my point of view, likely occurs in 2050, 2055, and then tapers off for 40 years after that. If you combine the fact that oil will be with us for a very long time with the fact that the cheapest sector in the S&P 500 in terms of EBIT, dividends, pick one, earnings, is the oil and gas sector. You understand why Warren Buffett, as an example, is absolutely filling his boots with oil company shares. The idea that growth investors wouldn't want to own oil, except for the fact that that noted energy physicist Greta Thunberg doesn't like oil. When you have the returns on capital employed and the free cash flow and the magnificent balance sheets offered up by the oil industry, is incomprehensible to me. Dividend investors, and anybody my age ought to be a dividend investor, dividend investors who don't buy those oil companies that are making sufficient sustaining capital investments to maintain their production and rewarding shareholders, and there's a bunch of them, they're just missing out on, I think, the most important macro investing theme in the next 5 years.
We have to ask you about junior miners. Volume on the TXX venture is down significantly from the 2021 highs. In your career as a junior investor, how would you describe the junior markets right now?
Increasingly rational. I think most of the junior mining companies aren't junior miners. I think most of them are lifestyle exercises. I think most of them, in fact, destroy capital. And investors are starting to run out of patience with that. I believe that if you merge not just the Toronto ones, but if you merge junior mining companies around the world, irrespective of domicile, Australia, Canada, United States, Great Britain, probably, 2,500 of them, some number like that. If you merged them all into one company, called it Junior Explore Co., that company would lose in a very good year $2 billion. In a bad year, it'd lose $5 or $6 billion. So you tell me, Cassandra, what would you pay to own a company that lost $2 billion a year? Would you pay 8 times earnings? 12 times earnings? You got it. Now, that statistic hides the fact that probably 5% of the issuers generate so much performance that they add credibility, even luster, to a sector that loses between $2 and $5 billion a year. And that's borne out in the markets too. When high-quality companies, high-quality juniors go out to raise money, they come back oversubscribed. The problem that you're talking about is the length and breadth of the market, which is comprised, I would suggest, mostly of the lame, the halt, and the blind. There are people now who aren't able to raise money for lithium, probably because they failed in pot, and they failed in gold, and they failed in crypto. Track records absolutely unblemished by success, who are blaming the capital markets for their lack of access to capital when they've abused all the capital that was sent to them over the last 20 years. So I think the market's in very healthy condition. I have participated in 5 or 6 placements myself in the last 3 months, and I note that all of them were handily oversubscribed. In every case, although I'm a fairly high-profile investor, I was cut back in terms of my allocations. And people tell me there's a capital shortage. I suggest to you that there was, is, and always has been an opportunity shortage. The opportunity to lose money on a lifestyle listing is not an opportunity that I personally lust after.
Okay, now if we were to talk about the markets bottoming and eventually turning, what do you think are the signals we should be looking for?
I'd like to see bankruptcies first. I'd like to see fewer listings. I'd like to see the same amount of money chasing fewer aspirants. I think that the junior equity market will, in fact, rebound without an extinction event first. I think that we are coming into a discovery cycle, and we are now beginning to enjoy the data that's been developed over 10 or 15 years as a consequence of the capital that was raised in the 2005 to 2011 timeframe. So we're going to start to see some discoveries. We are also going to see takeovers of good juniors by larger companies with lower cost of capital. I think, too, that there's an increasing sense on a global basis that ex-recession, which we may or may not have, that a whole range of industrial commodities, copper as an example, oil and gas, all have to go higher. We've underinvested in those commodities for a very long time. And the urbanization of the poorest of the poor will, irrespective of what we do, increase demand for those commodities in an area where there isn't sufficient capital to bring on new supply or sufficient time. I think that'll be reflected in the market. I think, too, that if we do have a recession or we do have a liquidity event of some kind, that the official sector response will be to absolutely pour fiat currency at it, will absolutely positively be to inflate. And I think that they are approaching the place where that becomes pushing on a string, all of which means I think that people are making a mistake, not paying attention to the high quality junior gold and silver companies. I'm not talking about, amalgamated moose pasture or consolidated orangutan, those penny dreadfuls where they're purporting to look for gold, but they don't happen to have any. I'm talking about the higher quality juniors run by the good people who have the third dimension. They have a drill hole into something that is a deposit and may become an ore body. I think those stocks will surprise people over the next 2 years. I think, too, that the market is beginning, the junior market investor universe is beginning to bifurcate. You are seeing the people who have populated, perhaps polluted, the junior mining investment for the last 15 years, people who are really traders, people whose attention span required them not to hold stock over a long weekend. You're seeing them replaced by mining companies themselves, by good seasoned speculators. Warren Buffett once observed that the market itself is a wonderful mechanism for transferring wealth from the impatient to the patient. And I think what you're beginning to see in the junior space is, if not the death of dumb money, the end of dumb money, and the replacement of that by smarter, more patient money. I like to flatter myself by considering myself part of that latter community.
Okay, so Rick, that's all we have for you today. But for our viewers, if they want to learn more about you and hear some more of your commentary, where can they go to?
Thank you for the opportunity. Any of your viewers who care what I have to say about natural resources, who want to find out if their own portfolio is comprised of the lame, the halt, and the blind, can go to my website, Rural Investment Media. List your natural resource stocks there. I will personally rank them 1 to 10, 1 being best, 10 being worst. I'll comment on companies where I think my comments might have individual value. In the question and comment section on rankings, if you aren't happy with your current bank, let it be known that in retirement, I'm starting a new bank called Battle Bank. I'd love to tell you more. I'd love to tell you how you can earn high interest on your checking account, how you can borrow against your gold and silver, how you can own rental properties in your IRAs if you happen to be American. So in the question and comment section, if you care about my new bank, or if you're just unhappy with your current bank, please write bank, and I'll send you some information on Battle Bank.
Okay, great. Well, thank you for that, Rick. And thank you for your time as always. It's always great to get to talk to you.
Always a pleasure. You threw a curveball at me with that social media question at the beginning, but thank you for that. Keeps me young.
Keep you on your toes. Okay, right. Bye, Rick. To our audience at home, thank you so much for watching today. We will be back with another video like this. So if you enjoyed this one, please consider hitting that subscribe button below me there and hitting that notification bell so you don't miss out on the next one. Bye.